Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me, Saisha Faridi. It's the weekly, monthly, quarterly, half-yearly closing today. And if you're a bull, you're definitely quite happy because series has happened already, right, on Thursday. But nonetheless, yes, at least start of a new month, you can say, and monthly closing for today. And it's been a stellar run for the bulls, in fact, this quarter and this year so far. We are at 19,160, a fresh record high for the bulls, 1% gain coming in. Not just that, it's a 700-point rally when it comes to Sensex, 1% higher, and for Bank Nifty as well, 400 points higher as far as that is concerned. Today, of course, we are seeing that auto stocks are also in front gear, top gear at that, because they are awaiting the monthly data. So, of course, that keeps them quite excited. It's the IT index, which has shown a solid comeback, almost a 2% gain. That kind of rally we haven't seen in a month. It's surpassed the 100-day moving average on Nifty IT, and quite a bit of breakout on technical levels is what our charters have been pointing out as well. It's the HDFC twins as well as Infosys that are adding almost 90 points to the Nifty move. So quite a few movers today, Aisha, in the trading session, and nothing to complain, right?
Nothing to complain at all. It's a picture-perfect market. You couldn't have asked for anything better. And just the number of names which are still sitting away from their life highs and from the previous Nifty high of December 1st, 2022, that just gives you confidence that there is definitely more headroom to this rally. So holding steady at that 19,150 plus levels, and of course a lot of stocks as well which are in focus this afternoon. You've got MCX, that of course has been tanking down from the word go. They've extended 63 moons cost extension, which is coming at about 125 crore rupees per quarter. Investec in fact believes that they're now going to downgrade the stock from the earlier hold to now from the earlier buy, I beg your pardon, to now hold, and they've also slashed the target prices on this one too. So that is definitely one stock which opened the gap down about 10% and hasn't seen any meaningful recovery whatsoever from those levels. There's of course HDFC AMC, in case you're wondering why this is the top gainer. Remember, SEBI in its Wednesday meeting had deferred the proposal to overhaul TERs, and this comes out to be a bit of a breather for the entire AMC basket. The SEBI chairperson also saying that the new consultation will be floated very soon and that the mutual fund industry is going to be happy with that. JK Tyres, that stock is the other one which is actually holding a buzz in trade. The first phase of their capacity expansion of the MP-based manufacturing facility is up and running, and that stock is also looking very good. In fact, quite a few bright spots within the broader end of the market, which by the way also is holding out. It's not just the Nifty. So look at an Indiabulls Housing, look at a Biocon. In fact, Indiabulls Housing is now up 6.5%. Biocon is floating high by about 6%. Bandhan Bank is a big winner today. That's also holding up 4%. And large caps like M&M on a tear, another 4% move. And look at the rebound that you're seeing in some of the IT names. Infi up 3.5% as we speak right now. Let's bring on board then our chartists and find out what they're making of the trading texture right now. Kunal Naresh on the show. Kunal, hi, afternoon. Where do we go from here on the Nifty, considering this is blue sky territory, whichever way you look at it?
Yeah, but I think it's going to get more boring as well as exciting over here, because you're going to see a lot of green for the index going forward.
That's not boring.
Yeah, we're happy
boring
with
is
that
what
kind of
we
boring.
did.
No, boring is because you'll have to see
when we didn't move at all.
Boring is because you'll see a very slow, steady, gradual up move. Because when you scale into new highs, new levels, new psychological mark, you expect the momentum to be slow, steady, but more gradual. Exciting because I would believe that a lot of new sectors as well as stocks which would start to participate. So I think what we've seen today, for example, majority of the stocks, the likes of IT stocks, large cap names, HDFC Bank, HDFC making a very good comeback for themselves. So many of these beaten down sectors as well as stocks, they are making a very strong comeback. So I think that's the exciting part, for the markets, where I would believe that, with more participation, more breadth from the underperformers could lead into more charge for the index going forward. Now, the last 2 days, we've seen two mild gaps on the index, on the Nifty. So those gaps should act as a support. For example, on Wednesday, we created a gap at 18,800 mark. That should act as a support, and today we've managed to make a gap just around that 19,000 levels for the index. So these two are the next two support levels or important support levels from a short-term play.
Okay, just flagging out a few more stocks which are buzzing around. We, of course, mentioned the likes of Biocon, Indiabulls Housing, but look at Abundant Bank. A large trade happened there, 4% higher. City Union Bank is higher by 3%. RBL Bank is doing quite well, and a lot of other names, right from Escorts to BHEL, Hero MotoCorp, all excited in the trading session. What's not doing well is the entire cement pack. Pulip and Ambuja Cement, that's down 2%. JK Cement is down 2%, and some of the other cement names like Shree Cement, etc., Ramco Cement, etc., are also on the back foot. And apart from MCX, which is of course a stock specific trigger today on that one. But talk about where we head from here on, and it's 20,000 something that we should start discussing on the Nifty. Nitin Raheja, the Executive Director, Head Discretionary Equities at Julius Baer Wealth Advisors, joins us on the show. Nitin, hi, that's the first question. 20,000 on the cards?
I mean, if you look at a long-term history in terms of how markets have traded historically relative to nominal GDP growth and the P multiplier, I mean, we were looking at, if you took a 1 year forward view, that yes, 20,000 is where you should be, especially after the kind of consolidation that we had seen over the last 2 years. So now, markets will always surprise you by either doing this earlier or later. But I think pretty much if you look at our, the earnings multiple number, and if and it's really not something very difficult. If you really think about it, we are talking of 1,050 EPS on the Nifty for FY25, and 1 year down the road, even if you sort of start discounting it at whatever 19.5 to 20 times, you are there pretty much there. So yeah, I would say that's pretty much where we should be, maybe in a year from now.
Okay, so that's a take coming in. But which part of the market do you think will continue to lead the rally? Is it going to be, let's say, financials? Is autos, which is looking good? And finally, are the large caps likely to make a comeback? HDFC Twins, Reliance?
So, if you're talking of the market going to those levels, obviously the large cap have to participate, right? So, and when you look at it across the board, financials obviously is one very, very large component which will drive the market out there. And, we are at a stage where if you look at the financials, even at these levels, they are not tremendously stretched in terms of valuation. I think the valuations are pretty much attractive given the growth and the multiple at which they trade. So yes, we sort of like the large cap financials, and we think they could be one of the major movers that could drive it. Among other sectors that we think that could lead out there could be consumer durables, and we are seeing a sort of a K recovery in the economy where the lower or the smaller ticket consumption items are actually slowed down because of inflation. And as inflation wears off and we get into an election year and the kind of money that gets infused into the economy, you should see a rural recovery take place. So you will see a consumer based recovery also happen in the rural and the tier 2, tier 3 cities. So I think you will see, on top of that, the kind of spending that the government is doing on capex. So I think fortunately, except for exports, you've got all legs of the economy sort of firing at the present moment.
Yeah, absolutely. In fact, let me take it across to Naresh and find out whether he's reading on the charts, if it's banks which is going to do the trick. Naresh, any of these large caps which are looking good on the charts and can still be bought?
So the whole banking space is now looking interesting, from large caps to mid caps to even small caps. So if you look at ICICI Bank, it's getting close to that 940 mark, struggling there, but 960 is an all-time high, so 20 points away. You have HDFC Bank in touching distance of 1730, which was the high for the stock ever since the merger announcement got done. So we are close to that. Then we have something like an IndusInd Bank, which looks most promising, hit a new 52-week high, back at a 3-year, 4-year high. Axis Bank is not far away from an all-time high. The smaller names have started making a longer-term trend change as well. So you have a RBL Bank making a trend change on a longer-term basis. So overall, the view is banking, we still need more price action to confirm momentum, but the trend is still positive. A tick above, sustaining tick above 1730 makes HDFC Bank the most positive one in the large cap banking space. 940, 950 crossing for ICICI would be interesting. So overall, the bias is positive. the momentum is positive as of now, more for the smaller and the mid-cap new leadership banks like IndusInd Axis, but it could even be the large ones like HDFC and ICICI could surprise going forward.
Right. Just looking at a couple of other buzzers, and clearly it's HDFC AMC all the way with an 11.5% uptick coming in. We just told you as to how SEBI has deferred the proposal to overhaul TERs, and that really is bringing about some amount of cheer in the entire AMC pack. HDFC AMC, of course, the top mover there. And the SEBI chairperson also indicating that the new consultation paper is going to be floated soon for the AMC segment. So Aditya Birla AMC, UTI AMC, Nippon Life, these are all the stocks which are in focus. Nitin, beyond banks, the larger financials, the not so traditional ones, AMCs, etc., is that a space to be looked at as well?
I mean, the entire AMC pack had got beaten down because of shifting regulations. All of it seemed to, sort of indicate a pressure point as far as the revenues are concerned. So in that sense, this is really a welcome change. Look, longer term, I mean, who can dispute the fact that the kind of savings that Indian investors have exhibited over the years, right? And which we saw the impact of those savings in the form of the strong SIP flows that flowed in almost all of last year and which actually insulated us relatively from the kind of selling we saw from FPIs. So, as your per capita GDP goes up over the next 4-5 years and the savings level grow up, surely, financial intermediation is going to be a far bigger business than it is today. So within that perspective, whether it's the insurance business, whether it's the AMC business, whether it's, online, broking, I think all of these businesses will see a tremendous amount of growth. What we've seen in the last few years has been a compression in margins. I think that's where you're going to hit bottom. And then it's all going to be volume-led over the next 4 or 5 years.
So let's watch out how that pans out. Time to slip into a very short break. But as we do that, maybe we can pull up the bites of the top ponchos at Aditya Birla as well as SBI Mutual Fund, whom we spoke with, Mr. DP Singh as well as K. Bala.
Impact will definitely be much lesser than before. But when we are talking about the impact, see, basically there are 3 stakeholders. One is of course investors. The second is the distributor, and third is the manufacturer. If we bring in overall at a percentage basis, they bring it down. So every stakeholder gets to lose. Ultimately, it is the value which we need to create as an industry for the investor. And I think whatever impact is will happen. I mean, I'm not putting any percentage to that as of now, but we'll have to look at the consideration.
I think the way the regulatory framework has been evolving all these years, the industry definitely has to attain a scale, and as a result of that, today what we are seeing in the marketplace, that 40 lakh crore industry size, about 23 lakh crore in equity size, is a function of how the industry has been expanding the base and building a scale. So naturally, the scale benefit should accrue to the ecosystem in general, which essentially the investors benefit. In fact, if one looks at the AMC growth versus the profitability, the growth would be far higher than the profitability. The very fact that SEBI chairperson during the press meet have given an acknowledgement for the engagement that we had with SEBI at multiple levels, I would like to thank SEBI chairperson for this, for having heard us.
Welcome back. Thank you so much for being with us. For now, the Nifty is holding on to that 19,170 mark, but one space which is firing away totally today is the auto pack. Not just the fact that we're expecting the June data to be good, there's also a slew of launches lined up, which is keeping the space excited. In fact, SUVs are the favorite of Indian car buyers, and in the month of July itself, auto players are going to launch or unveil half a dozen sport utility vehicles, ranging from 10 lakh rupees to a whopping 1 crore rupees. In fact, around 70 to 80% new buyers are now preferring vehicles of this class. My colleague Sumit Chaturvedi is joining us with more details on this one. Sumit.
Customers are going to be spoiled for choice in market once again, where 6 new SUVs will be either launched or unveiled in July. Let's begin with Maruti Suzuki's Invicto. Well, it's a new SUV that's going to be rebadged from Toyota by Maruti Suzuki. It's Maruti's most expensive SUV ever, going to be priced between 20 to 25 lakh rupees. It's going to make Maruti available in very premium segment. It's really going to be a very small number game for the company. Next, coming to Hyundai Exter, where it's going to be Tata Punch rival. It's going to have 1.2 liter engine. It's going to have this powertrain, well, as good as this Hyundai i10 Neos powertrain, but it's going to bring Hyundai SUV once again in a lower segment. Coming to very expensive SUVs, Audi's Q8 e-tron will be unveiled. It's a bit of a change from current e-tron. It's going to be costing customers over 1 crore rupees. It's an electric SUV and it has a range of over 500 kilometers. Audi is going to bring it for the customers, a new refreshed version of its Q8 e-tron in July only. Then comes Honda's Elevate. Well, it's going to be unveiled and properly we are going to drive it in July. It's going to be Honda's first SUV in the market for mass segment. It's going to be launched in festival season, but we are going to see it in flesh and bones in July only. Also going to come A-Cross C3 from Citroën. It's going to be a 7-seater SUV from this French auto major, going to compete with Ertiga and other 7-seater SUVs in the market. And then Kia Seltos, the facelift will come with a panoramic sunroof and other minor changes. But it's going to be 6 to 7 new unveils or launches in July, and customers are going to be spoiled for choice in a market in which around 70% of the new sales are made. So be ready to see all those new launches or unveils next month.
Okay, so many new launches and the sector clearly firing up on all cylinders. Let me welcome on board then Mitul Shah, Head of Research at Reliance Securities. We also have with us Hormaz Sarabji, Editor Autocar India, joining in on the show right now. Mitul, Hormaz, both of you, thank you so much for joining in. Mitul, if I could just start off with you. You know, I'm going to talk about those new SUV launches that my colleague Sumit just highlighted. But before that, come tomorrow, we're going to start seeing the monthly dispatch numbers come in. What is your expectation broadly from both passenger vehicles as well as two-wheelers?
See, both the segments, passenger vehicle and two-wheelers, have already started improving. The passenger vehicles were already in a strong footing since past 1.5 year, but two-wheelers remain subdued during past 1 year. But in last 2-3 months, what we are seeing that there is a rural recovery or revival in the rural demand particularly, which has helped two-wheeler segment also. So for this month, we'll see flat to marginal growth for both the segments. And we should note that Maruti, being a leader in this space of passenger vehicle, and it has always a half yearly shutdown for the month of June. That's why production number would be slightly low, impacting the overall passenger vehicle volume. But otherwise, still we believe that because of the, as you pointed out, strong demand for SUVs, passenger vehicle segment will continue to record healthy growth going forward also.
Okay, so that's respect to what's really lined up for the entire auto sector. But let me bring on Hormaz as well to talk to us about what he's making of the entire auto space. In fact, let me start with the two-wheeler space, Hormaz. Do you see this making a strong comeback now? The premium two-wheeler segment is looking interesting with players like Bajaj Auto and Hero Motor entering the space on the premium side, and that might give a fight to Royal Enfield. What's your own reading of what's happening in the entire premium two-wheeler space now?
The launches are in the premium end. You've got the Bajaj Triumph bikes, which everyone was anticipating because these are going to be now made in India, really the first products coming out of the collaboration. And of course, you've got Harley and Hero as well, both being kind of showcased within about a week or a little more than of each other. So I think it's created some excitement for sure. Clearly, all depends on what the pricing is going to be. But I think overall, the two-wheeler market, the mass end of the two-wheeler market, I think it has bottomed out. It is kind of going to be coming out of the woods. Again, really, it's going to be a function of the economy that drives it. And really, I think it's really at the lower end where people have been the most impacted and have taken the longest to come out of really the challenges from the pandemic. So, but I think, overall with the outlook of an economy, when you see it relatively to the global scenario, which is positive, I think one can start getting to be a bit upbeat about the two-wheeler space as well.
Right. Since we just talked about the passenger vehicle space as well, Hormaz, in PVs we're hearing that inquiry levels are now coming down. Discounts once again are inching up. Do you believe that it's a short-term phenomena and once again the demand can catch steam?
Well, I think, passenger car outlook also, I feel, I think has to be a bit tempered. I don't see too much growth going forward. I think now this quarter going forward, we'll feel the base effect. I don't see more than 1 to 2% growth. Also, what we have seen is with the semiconductor supplies easing and more availability, the supply side is also taken care of. So there's enough supply. Demand side is getting a little soft. So inventories are also piling up. Discounting is coming back in, across certain segments. It's just specific models which there is high demand and yet supply issues that are still having a challenge. Classic case being the Innova High Cross, which waiting period going for over a year, but again, very small supply of that. But I think overall, it's going to be, in a way, back to business where dealers will actually have to do some work. And really, I think the hard selling will start now.
Mitul, let's get stock specific and discuss that. Give me one stock each from the passenger vehicle, commercial vehicle as well as two-wheeler category that you like the most.
From passenger vehicle point of view, Maruti will always remain a clear winner with a strong dealer network, and of course these new models are now coming in a SUV segment which is in a very high demand, and within SUV also there is a flavor for the high end vehicles, and where the Maruti was lacking, there was a huge product gap, so that is now getting bridged out. So that's why we believe that Maruti would remain a strong player in the PV side. Within two-wheeler side, we believe that TVS is going to be a very big winner because it's not only about the recovery in the domestic two-wheeler market, but it is also about the strong revival of the export business in the second half of financial year, where the company's margin would get kick booster and will see surprise on the EBITDA margin side for that company. On the CV side, we are quite negative. We believe that MHCV cycle is now at the verge of peak out, and anytime probably towards the end of FY24 or FY25, it will see down cycle, and that's why we remain negative on that, and we recommend sell recommendation on the Ashok Leyland.
Okay, so that's the top recommendations coming in, but let me get a technical perspective also into the conversation. And Kunal, if I can ask you about Maruti Suzuki, because it's just that 200 rupees shy of that 10,000 mark, as well as M&M, which is, I think, what, record high level?
Yes,
what's the chart on that? And let me add JBM Auto as well, given the fact it's up 30% this week.
Yeah, I think JBM Auto has moved up higher. I've not tracked the stock off late, but I think it's moved up about the 300 levels the last I had seen. So again, very attractive moves which you've seen for JBM Auto over the last couple of weeks. For Maruti, I think the case could be interesting because I think that's a stock which I've been regularly tracking, at least over the last 1 month. The recovery from 9,000, 9,100 towards now 9,900 approximately for Maruti. All of that looks very attractive, and it indicates that this could be a bigger trend in the making. So the mild correction which we'd seen for Maruti almost a fortnight back, where the stock corrected some 500 points. I think that correction is now easily absorbed, and the stock could probably now catapult itself towards 10,400 odd mark. That's the target which I would now ascertain for Maruti on the upside. And for M&M, I think again the stock has confirmed a classic breakout. It's a flag pattern breakout for M&M on the charts, and we could be looking out for at least another 80 to 100 points. So possibly a 1540, 1550 for M&M could be something which you can look out for.
Well, 200 points higher, 19,200 is what we are gearing towards, and who knows, soon we could even be hitting that 20,000 mark on the Nifty. But I must have to ask you before we let you go, you know, all the buzz around Tesla now planning to enter India, that, you know, much covered and much, you know, talked about meeting between Elon Musk as well as Narendra Modi as well. Wanted to understand, what are your thoughts on the same?
Well, you know, Tesla and Elon Musk, they are the poster boys of the EV world, so a lot of excitement around them. But honestly, I don't think, you know, it's going to make a big dent in the EV space. Firstly, Tesla don't have the budget models. I mean, look at the way Nexon has cornered 90% or 80% of the market with what is just a fundamental and basic EV, because that's really what Indian consumers want at a basic price. I don't think Tesla in any way can compete at that level or even compete in segments higher. So it's going to be a high-end vehicle. They might make a low-cost one. We believe that is in the works, but we are not sure. But even so, how cheap can they make it, or how low will they go in terms of price? So I think it's you know, great to talk about, but I think if and when they finally come, I don't think you know, they're going to grab the market as some people think they will. It'll kind of give you know, let's say, make the EV space a lot more special and exciting. And again, Teslas will have to kind of tailor their cars for Indian markets, because right now, I've driven a Tesla Model 3. The ground clearance is so low, it just hits just about every speed breaker.
No, definitely Tesla will have to reimagine itself for India. But just Mitul, before I let you go, from the OEM perspective, do you see a huge opportunity for the component makers, etc., if at all Tesla and other players as well come to India? Mitul, the question is for you.
Is it for me?
Yeah, Mitul.
Yeah, we believe that there are various ancillary companies also going to get benefited apart from the OEMs with this revival. But there are few segments like tire segment where the OEM revival supports the volume. But apart from that, the replacement demand and probably the export recovery is a key trigger for their top line. But on the other hand, raw material prices for these companies are coming down drastically. So we believe that tire companies would continue to enjoy higher margins, and margin would further improve in this Q1 and Q2 sequential basis. And there is a earning upgrade and re-rating to continue for these companies.
Okay, Mitul, on that note, we'll let you go. Harmaz, thank you so much for joining us and making time for us. So that's the holistic discussion coming in on the auto sector. But with that, slipping into a very short break.
Back with closing trades right here on ET Now. Closing trades are finishing off with a record this Friday afternoon. It's a solid 170 odd point move that you're seeing on the Nifty futures. 19,250 is almost where they're currently at. And come Monday, the Indian market open indicator, that's the SGX Nifty, will also have a new name. It's going to be called Gift Nifty. My colleague Sharad is here with you know, all the key changes that the new avatar of SGX Nifty, that's Gift Nifty, is going to bring about. Sharad?
Well, yes, early indicator of the Indian markets was SGX Nifty. Now it will be rebranded as Gift Nifty. And do remember, now the Gift Nifty is actually NSE's IFC SGX. Now that's going to be the exact connect. Now the overall trading is expected to happen to start from July 3rd, and now SGX Nifty will be trading in NSE IFC. Now the question remains is, what is NSE IFC? To put it simply, this is basically the NSE International Exchange in the gift city of Gujarat. Now do remember, the contracts itself will be trading in the dollar denominated, and it's a fully owned subsidiary of NSE. So that is what everything is all about, NSE IFC. But what are the key important participants going ahead, and of course which contracts should be there? Of course the big names come in, such as Gift Nifty 50, Gift Nifty Bank, Gift Nifty IT, and also Gift Nifty Financial Services. And over the period of time, more contracts will be introduced. Apart from this, the contract, the timing That is something which you'll watch out for. It's almost 21 hours. That means it overlaps the major trading hours of Asia, Europe, as well as US. And of course, the timings also will be actually in focus as well. There'll be two sessions. One, of course, will be in the morning as well, and the evening, which goes into the late night. Now, what happens to the open interest of SGX Nifty? And of course, the entire OI will be shifting to the SGX. And of course, do remember that the SGX Nifty OI is currently at $7 billion. And the daily volumes, they come in roughly at $1.5 to $2 billion. Now, apart from this, what contracts should be available? And of course, we have mentioned the important contracts over here, but it will be available as well for futures and also options. And now let's look at what the benefits should be there for the GIFT City. And of course, a lot of exemptions would be there since it's an SEZ, and the key exemptions, if we talk about it, they include exemptions such as security transaction tax, commodity transaction tax, and of course the main thing being no income tax. Apart from this, a couple of more benefits coming in for the consumers, as they'll do away with the time hedges which FIs would actually have when it comes to the Indian investors, and also now the retail as well as DIs can actually hedge their positions as well.
Putting that into perspective, so that's what will happen come Monday morning. You'll be seeing new levels when it comes to GIFT Nifty in the morning on Monday. But what's happening right now is many buzzers. Naresh, let me talk to you about a couple of them. JK Tyre, which is up around 14%. You have Karnataka Bank, which has had a solid run over the last couple of trading sessions. And Biocon, which is up today 9%. Of course, I think this is a build-up to that Humira launch, which was expected to happen early July. What's your take regarding these three counters?
So JK Tyre and Biocon look very promising. So JK Tyre is now a multi-year breakout. The stock at last in 2015 to 2018 topped out at 160 and then 180. And now it almost topped out at 180 back in December 23. Again in March, April, May, it made a top around 180 to 200. Now it's given that breakout, which is almost a 5 to 8 year breakout. So this gives a longer term target price of 300 out here. So still promising. Any fade off to 220, 25 levels would be a buy. Biocon is very interesting because the stock, I've recommended this before, and technically if you look at it, the stock went, the only pharma stock which went below March 2020 prices and recovered back. And now for the last almost 2 months, it was in a range of 240 to 255. It had seen a gap up move in May around 260 odd levels, then faded off. Now we are back about 260. Today's volume are almost 3x to 5x the general trading volumes. So seems like a start of a new trend. This could surprise on the way up, like which we've seen in some of the pharma names like Oro and Lupin. So this could actually surprise and go towards 300, 330 levels also. So buy at current levels as well as on dips.
That's the word coming in on Biocon. Definitely a big buzzer today, as is Indiabulls Housing. BEL as well has spurt up. In fact, we should bring up the intraday chart of BEL because the spurt in the stock has just come in the last few odd minutes or so. It was a strong session, but that big spurt has only transpired right now. Kanal, anything unusual on the charts?
Nothing as such. I think many of these PSU names are seeing a rally for themselves. I was looking at HAL chart. Even that stock has seen a last half an hour, last 1 hour momentum for itself. So I would probably assume that it's got to do with more of the momentum plays that's playing on into the market. For BEL, the good part is that the support 2 or 3 days back when the stock was at sub 120 levels, that would now act as a key short-term support. So earlier the stock had support close to 110 odd mark. That gets shifted higher by almost 10% margin.
Okay, let's talk about a few losers as well with Vineet Bulinshkar. Of course, Vineet wanted to start by asking you about the cement pack. That is seeing quite a bit of selling today. Do you think this is just seasonality in store, or do you think that the worst is priced in and now maybe the raw material getting more conducive, etc., should augur well for this space?
Definitely, we think that the cement space augurs well for in the future, and I think it's purely because we had seen a run in the stocks earlier because the rainfalls were delayed, but with the now rains catching up, and spreading well across the country, I think there's a profit booking coming in. But I believe that eventually these stocks, once the selling peters off, we will have this join the bandwagon again.
MMFSL, those are stocks which are holding a buzz. There's RBL Bank, which is looking strong. BHEL is holding up about almost 3%. Technologies made a comeback, so both Infi, TCS are big buzzers today. LTTS, of course, has been very strong as well. And then Bharti too, we had the subscriber numbers come by for the previous month, and Bharti added about almost 76,300 thereabout subscribers in the month of April, and the market share definitely has risen. Of course, for Jio, this number is strongest. They've added about 30.5 lakh users in that month. And VI, of course, that's Vodafone, they continue to lose subscribers. They've lost almost about 30 lakh subscribers in the month of April. So, it's the amount they've lost is the amount that Jio has actually won. But Bharti, of course, has been one very strong show right now in trade. But Vinit, just wanted to understand, how are you placing the bets when it comes to pharmaceuticals? Because that's the one pocket of late which is showing quite a bit of traction.
So we like Natco Pharma out here. And along with this, we are also quite optimistic on Dr. Reddy in the short term. And among the large caps, we prefer Cipla.
Sorry, go on. You were speaking something about the pharma space, Vineet?
Yeah, I was talking about the pharma space,
Sure.
the stocks that we like. So I said that in the short term, we like Dr. Reddy's. I think that there is enough bang for the buck coming in where the earnings should spike in this year. And we prefer Cipla and Natco, which have got strong growth triggers coming in over the next few years.
Natco and Cipla, these are the two stocks that you like. Hold that thought, Vineet. Let's welcome on board our researchers as well. Ankur as well as Harsh join us, because it's the end of an era at the HDFC group as the NBFC gets merged into the bank. This will create the world's fourth largest lender in terms of the market capitalization, just after the likes of JP Morgan, ICBC and Bank of America. Let's go across to our colleagues to understand what would be the new entity like, and more importantly, the chairman Deepak Parekh, who has played an important and crucial role in the success of HDFC, will hold no executive role in the new entity. What would that mean? What is the legacy that he's leaving behind? My colleagues are joining us with the detailed analysis.
It was year 2013 when Sachin Tendulkar played his last match at Mumbai's Wankhede Stadium, and 10 years after that, Deepak Parekh on 30th June 2023 is attending the last board meeting. Now both of them are important because, like Tendulkar, Deepak Parekh commands the same amount of respect for building an institution like HDFC, and not only inside the boardroom, but this is outside in the financial world as well. We'll go to one by one. If we start with today's event, of course that board meeting is important. Tendulkar and HDFC both hit first 100 within 5 years. In 1993, it was Tendulkar who hit the first 100 after playing for more than 4 years. Similarly, in 5 years, HDFC hit first 100 crore of asset size. Now, last board meeting under the chairmanship of Deepak Parekh, and this will not only for him, but also for VC and MD, KK Mistry, who has helped in building this kind of institution. Apart from that, if you also see the timeline of events, it was in the year 1977 when H.T. Parekh, who is the uncle of Deepak Parekh, he started and founded this institution of HDFC, and within the next year, that is in 1978, disbursed first loan of 30,000 crore. After that, if you see the next few years, in the year of 1981, loan approval has surpassed 100 crore in that year. And after that, the journey actually took off in 1992 when Deepak Parekh was appointed as chairman of HDFC. After that, in 2003, HDFC and HDFC Bank Pact was announced, in which the sourcing of loan was done through this institution. Apart from that, is 2006. Home loan approvals had surpassed 1 lakh crore for the first time in the single year. Then come to 2022, the home loan disbursements surpassed 2 lakh crore in this current fiscal year of 2022. And same year, the merger was announced, that was in April 2022. And that was quite a surprising one in 2023. Now finally, we have the effective merger date. Although it is tentative, it is July 1. And there will also be listing of shares which is tentatively on July 13. Now I also ask you, Harsh, what happens to this combined entity? How big this merged entity will be?
Well, absolutely, Ankur. So it's a super large entity. It's becoming the fourth largest bank in the world behind JP Morgan, Bank of America, and Industrial and Commercial Bank of China. So it goes in this order: JP Morgan, Industrial Bank of China, and Bank of America, followed by HDFC Bank. 1.72 my apologies, $172 billion in terms of market cap is what the size will be or is expected to be. Let's look at the asset size: 23 lakh crore rupees. You've got a PAT which is exceeding 60,000 crore, making it the second most profitable domestic company, after the likes of a Reliance. And then you have 8,300 branches, only second to SBI. Employees at 177,000, and you have 12 crore customers at a combined entity level, right? Around 8.5 crore customers for HDFC Bank standalone, and 2.5 odd crore customers when I add the subsidiary companies as well. Let's have a look at how the market cap has really moved from an absolute minnow down there at 1850 crore. It's now 5 lakh crore. This is HDFC Limited's market cap journey. And the kind of returns, Ankur, that it's given is 270
Definitely.
times. So if you had invested 1 lakh rupees in 1995, it would currently be roughly 2.7 crore rupees.
That's mind-boggling.
Yeah, that's absolutely mind-boggling, right? But that's been the journey, and of course, tentatively on the 13th of July, that entity gets delisted. Truly, the Tendulkar of the home lending industry.
Definitely, like all good things take time. One more analogy with Sachin Tendulkar. It was 23 years when Sachin Tendulkar hit 100 in 2012. And if you talk about HDFC, it took around 29 years for hitting that 2 lakh crore mark. So, of course, there is a lot of analogy between Tendulkar and Deepak Parekh as well as the institution. And like both of them, they are leaving with their heads high, with the handing over the future to the next lot of leadership.
Okay, thank you both of you for analyzing what a legacy Deepak Parekh has had with the HDFC group, and yeah, how he is literally the Sachin Tendulkar of the banking industry. But let's move on and let's talk about JK Lakshmi Cement. That's of course the one stock which is in focus. The dealing room is a buzz around the cement stock, and this one surely is the one which is currently bleeding in the space. So let me take it across to Sharad and find out what's the chatter around this one.
Well, yes, in focus, we're having JK Lakshmi Cement, and what we are hearing from the dealers is some selling has been seen from the domestic institutional investors' point of view. And do remember, the DI investors who have already invested in the stock include bigger names such as the HSBC Mutual Fund, DSP Mutual Fund, as well as Nippon India Mutual Fund. Now, important takeaways coming in from the cement companies as well as applicable for the stock is that the raw material prices have actually bottomed out and the valuations are on the higher side. Now, do remember the stock itself has gone below the 50 and the 100 DMA mark, and it's testing the 200 DMA levels at the current trade. Apart from this, also the 12-month target price set as per Bloomberg consensus is 813 rupees per share. And of course, the most important channel checks which we have been undertaking for the month of June, and what we are gathering from our sources is that all India average prices that is actually stable on a month-on-month basis when it comes to the pricing. But there are certain details we'd like to point out. There was a delay in the monsoon leading to a better demand coming for the month of June. Apart from this, also some price hike announcement is expected to kick in for July, but this is likely to contain just for the decline in the monsoon season. So overall, there is a stability in the prices, but we are seeing some profit booking coming in from the domestic institutional investors.
Okay, thank you, Sharad, for that, joining us with the latest coming in on that cement name. But Vineet, I wanted to shift focus and talk to you about some of the public sector banking names, because they are definitely perking up, whether it's a Punjab Sind Bank, Indian Bank, PNB, UCO Bank, Union Bank. They're all higher today. Is there any name apart from SBI from the entire public sector banking space that you would like to make a bet on?
I think we like Bank of Maharashtra. That is one counter which is not in everyone's, top of the mind. And we believe that it has got very, very strong fundamentals. They've got 1,000 crores of excess PL provision coverage. They're going to keep growing very high. They can continue to grow at 25% growth. So I believe that this stock can, go to $50. We have a buy recommendation on the stock, and this is one of the most underrated banks in the entire PSU pack.
Okay, a potential doubler. That's Bank of Maharashtra for you. But on that note, Vineet, we'll let you go. Thank you so much for joining us. Quickly taking the BDST ideas from our chartists. Kunal, Naresh, Kunal, you go first with the BDST trade.
So I'll go with a couple of buy calls, and the first one is a buy on HDFC Bank. That's a stock which I would suggest as a buy. Targets closer to 1750. Stop loss could be kept at 1675, and would retrade a buy on Maruti for a target of 10,000 plus. Stop loss could be trailed higher significantly to 9,600.
Okay, Naresh, what about you? Are you also looking at large caps? Kunal had HDFC Bank and Maruti on list.
So looking at two mid-cap banks, first is the buy on Federal Bank, which has started reversing from the support zones. Looks like a false breakdown here. Stop loss at 123, target at 130. Second is the buy on RBL Bank, showing a lot of leadership. Stop loss at 178 and a target price of 190.
Okay, let's begin winding up for the day, for the month and for the quarter as well. By the way, the Nifty has hit a fresh record high this quarter. We've registered the biggest single quarterly gain in about last 7 quarters, and had a touch and go moment with that 19,200 print as well. For the futures, of course, we've scaled up much higher than that. 48 out of 50 Nifty stocks have actually managed to advance this quarter. Tata Motors, Adani Enterprises are the ones which have actually led. The mid-cap index as well has closed off at record highs this quarter. L&T Finance, Dixon Technologies, these are the two stocks which have led. And the small-cap index as well has managed to hit a 52-week high and has managed to gain about 20%. Real estate has really been one of the top performers. Nifty Auto Index as well has hit a record high. There's been pharmaceuticals, which has managed to snap its 2 quarters losing streak. Oro Pharma, Glenmark have managed to lead. PSU Banking Index, metals, FMCG, they've all contributed to the quarterly gains for the markets. But good show today as well. Individually, Indiabulls Housing, M&M, BEL, M&M Finance, M&M, Biocon, HDFC AMC, Bandhan Bank, Innocent Bank, Persistent Systems. These are all gains or other stocks which have actually led very, very smartly in trade. And of course, there's been that performance from Infosys, Hero MotoCorp, TCS, Sun Pharma, Maruti, L&T. They've all finished off with flying colors. But on that note, we're going to wind it up right here on this edition of Closing Trades. Thanks so much for watching.